A recent joint report has been published between Fitch Ratings and CyberCube. It looks at the impact of systemic cyber events on the US banking sector. I'm Yvette Essen for CyberCube, and here from Fitch to talk about that report is Christopher Wolfe. He's Managing Director and Head of North American Banks. Also joining us to talk about that report in detail is Souki Chahid. She's Principal Client Product Advisor for CyberCube. Thank you for joining me.
Thank you.
Chris, can I start with you? Why did you decide to embark upon this research?
We've been thinking about the intersection of cybersecurity risks and credit ratings for a few years now, especially given high-profile breaches of large private and public sector entities. So we've been trying to get a better insight into both the absolute and relative vulnerability of a particular entity or sector to a cyber event, as well as the potential financial impact if there was a cyber event. For example, the Equifax breach is estimated to cost over $700 million. So these types of events could matter for credit ratings. And so we have been thinking about this and trying to get better insights into what this risk could mean from a credit rating perspective.
Chris, thank you very much for setting the scene there. Souki, can I spend some time talking to you more about the analysis with Fitch Ratings? What data did CyberCube require to create this report, and what did we indeed use?
Sure, Yvette. So for the purpose of this analysis with Fitch Ratings, or for any catastrophe model analysis for that matter, we are using exposure data. By exposure data, I am referring to information that provide an indication on the risk associated with the specific company, in our case, the US bank. So we collected collectively with Fitch Ratings a set of portfolio that is representative of the US banking sector. So this exposure information contained elements such as the size of the bank, the revenue of the bank. And then within CyberCube, we used our own data lake in order to enhance that data and further augment that data by incorporating information such as number of employees, the number of records that may be held by the bank itself.
Great. In a little bit more detail, can you tell me about our model? What model did we use for the research, and how did it support the analysis?
Absolutely. So we used CyberCube proprietary model for aggregation risk. So within this model, we are looking at cyber threat risk through a specific lens. We are looking at it from the angle of a single point of failure. By a single point of failure, I am referring to the technology to which a bank or multiple banks may be connected. Think about an Amazon Web Services, a GoDaddy, a Gmail for Business, a OneDrive, and so forth. So imagine if a cyber threat is occurring at that single point of failure and it is exploited and not available. It will have a cascading impact on the banks that are connected to that single point of failure. And this is how we have defined a systemic risk. For the purpose of this analysis in particular, we really looked at a set of scenarios and all the technologies that may be impacted within each of these 29 scenarios and what the impact on the underlying US banking sector may be.
Thanks for setting up the background there. Chris, if I could turn to you, I'm sure there were many, many different points of interest there, but were there some key findings in particular that were interesting and stood out for you?
Whenever we do these things, I think you always find some really interesting and enlightening things. And so I would say, first off, just thinking about single point of failure in a more systematic way, I think was very enlightening. So I think while we have always recognized that banks and other, rely on many other service providers, seeing how the different scenarios could play out, I think was very interesting. And also getting a better sense of what are the scenarios that are most impactful. So I think that's very helpful to get a sense of what are the things that, when they happen, really matter. And I would say the other thing that was very interesting and something that we've wrestled with for a long time is just being able to put some dollar signs around what these scenarios could mean. So I think that starts to inform how we think about it. And then lastly, the other thing that I thought was very interesting in doing this was just the way banks use cyber risk insurance. And so what we found was, the bigger banks are typically trying to guard against, what we would say is the lower frequency but higher severity tail events. Whereas when we looked in the smaller banks, they're generally they're using cyber insurance to protect against the more frequent but less severe cyber events. So I think that was very interesting, and I think starts to inform our assessment of how we think about cyber events.
Chris, can you explain to me, now you've got these interesting findings, what are you planning to do with this research?
Well, Yvette, so we're using it to help form an understanding of what a cyber event could cause, and when and if one were to occur. So, for example, the research gave us a better understanding of which events will be the most impactful and the associated model costs. So therefore, if we do see a cyber event, we'll have a benchmark against which to assess the potential costs that come out of it. So just take, for example, the scenario of a widespread data loss of a leading operating system provider. We now have a sense of what an average loss could look like. And therefore, if we see that event happen, we'll have a sense of, to the extent a bank is experiencing a loss that's greater than that, that will tell us whether or not there may be a credit rating implication as a result. I also think it's helpful to understand how banks are using cyber insurance. So the headline figures tell you one thing, but also understanding how a bank may have mitigated through cyber insurance potential costs will also be instructive and informative to us.
And Souki, from CyberCube's perspective, were there any key lessons learned, any key takeaways there?
Absolutely. I think I'm going to be joining Christopher's comments around systemic risk is a real risk for the US banking sector. And this analysis has really proved that. So we have seen that in the tails, there are like some risks that are bigger than others. And that confirms the cyber threat landscape that we are seeing and monitoring, on a daily basis here at CyberCube, and even that we are hearing from the news in the market in general. So I think the key lessons learned is really like to keep monitoring what the US banking sector will do in the future. And that can be anything that they undertake as part of their operational risk or potentially insurance purchase, as Christopher has alluded to earlier. But those are really critical and may dictate the future of cyber risk for the US banking sector.
Great, thank you very much for those summaries. Chris, that report, Quantifying US Bank Systemic Cybersecurity Risk, where can that be located?
The report is available on our website for subscribers at www.fitchratings.com.
Great. Chris, Souki, thank you very much for your time. For CyberCube, I'm Yvette Essen.